So in this video, we're going to be starting our small account challenge. We're going to be testing some uh, options trading strategies for consistent income, high probability income. We're going to be starting off with $1,000, which I think is a pretty manageable small account to start from. It gives you some room to play without constricting you too terribly much. We're going to be doing these strategies with paper money, so all of these trades are simulated, so the risk of losing actual money is non-existent. And the reason being is because we want to take this as an educational opportunity to really put the high probability credit spread strategies to the test. So before we put in real dollars, I want to see what is the likelihood of us actually hitting those high probability credit spreads. So today we're going to start off with one strategy, and that's day of expiration day contracts. So we're gonna buy a credit spread for the contracts that are expiring today. So I went ahead and I drew a few lines here. So the cyan vertical line represents the contract termination, so that's the end of the day. And the red line and the green line represents the sell and the bought contracts. And so I'm thinking that, if you see over the past week, it stayed, the SPY has stayed above 281 pretty consistently, pretty easily. At the beginning, last Monday, it was breaking through that point, and it stayed above. It came up and came down, and then at the beginning and middle of this week, it began to come back down. It bounced a little bit. It found some resistance. It came through that point yesterday morning, and then came right back up. And so, as you can see this morning, through after hours, it dropped again, opened up just above that 281, and it's starting to go back up. So I think this is going to be a good strategy. That this is going to be a good entry point, just from the charting analytics. So let's go and check out the trade. Okay, so if we come into the options chain here and make sure you have vertical spread checked. That way, you're in the right setting, because if you don't, you'll be in a single spread, and then you'll have to input the spread by itself, so it wouldn't do it for you. So when you do vertical spread, it enters the two different strike prices automatically for you. So we want to make sure we're looking at the 281 and the 280, because if we go back to the chart, that's where we were drawing our resistance lines. So we're saying 281 and 280. So you want to sell the 281, and we want to buy back the 280. Okay, so when we open up the options chain here, we want to scroll down to the 281 and the 280 strike price. Make sure that you have vertical selected for your spread type. That way, when you click the order, it's an automatic credit spread. So we're going to be doing a put credit spread, assuming that it's going to stay above 281 strike price. So we have a bullish take on SPY today. So we come over to the 281 and the 280 strike price. So we're going to be selling the 281 and buying back the 280. So we click the order here, it brings it up for us. And so this is just confirming that we're selling the SPY May 15th 281 put, and we're buying the SPY 15th of May 280 put. And so we're getting about a $16, $17 credit. So I think I want to, well, before we do that, we want to know what our risk is. So if we were to sell one contract each, we would be, earning a max profit of $16, but we'd be risking $84. And so you get the max loss by taking the difference between the strike prices, which is $1, but there's 100 shares, so you times 1 by 100, and you get 100. And then you subtract the max profit, which is the credit that you get. So 16 minus 100 is $84. So if you were to, sell two contracts, you would be doubling it. So we just moved the strike price up by $1. So you'd be getting 17 times 2, which is 34. And then it'd be 34 minus 200, because you'd be doing a credit spread of 200 shares. So I think we want to up our max profit a little bit. I think if we sell 4 contracts, we're at about $64. So we'd be risking a max loss of $336, but $64 of a starting balance of $1,000 is about 6.4%, which is a solid gain, a day's gain, which is very good. So I think I'm happy with the $64 gain for later today. So I'm going to go ahead and submit this order, and we got filled, so that's good. So we'll check back in at the end of the day to see how SPY performed. As you see, we got quite a few hours left in the day. Go ahead and open this up. Right now, SPY is trading at 283.58. We're about a third of the way through the day. So as long as it stays above the 281, by the end of the day, we'll get our max profit, which would be great. So let's put this strategy to the test, and talk to you guys later. About 2 hours left in the trading day, and as you see over here, our overall profit is it just went down to 56, but that's a pretty good profit. If you remember, our total profit was going to be $66, so this is $10 shy of that. So I think we're at a very good point of locking in our max profit. And so I want to go ahead and lock that in and secure that. So to close the order, I'm going to go and I'm going to highlight both sell and purchased puts, and then I'm going to right click, create closing order, and I'm going to close it at the 3-cent limit. And then I'm going to go ahead and confirm and send. And we got filled. So when we take into account the cost of the trades, which is 65 cents per contract, we had sold 4 contracts and bought 4 contracts, so it's 65 cents times 8. So we subtract that from our total profit, which was $56. So we ended up gaining $45.50 today, which is a 4.5% for trading day of option contracts. So I'm happy with where we ended today, and look forward to Monday. Have a good weekend.